What is the better investment, gold or Bitcoin? Now, there is a correct answer. So, I want you to pop into the comments what you think below to see if you get it right. Now, we're going to look at the two asset classes first. So, let's dive into a bit of information and then we're going to see what is the better investment. So, Bitcoin versus gold. Now, the first thing I want to look at is the price action. I've taken two charts. One is gold, one is Bitcoin. First question to you is, well, first of all, can you see the similarities on buying psychology? Right? This is just buying and selling crowd psychology, whether it's gold or Bitcoin. How fascinating is it that they're almost identical? But first, can you identify which one of these is Bitcoin and which one is gold? Have you guessed? All right. The one that is Bitcoin is at the top and gold is at the bottom. And the time frames, Bitcoin is much newer, right? It's 2009 since it's been about, but the price data is from 2017 to 2021, the year, last year, November high. And gold is from 1976 to 2020. But it's fascinating how the price movements are almost identical over a larger time frame. But now we're going to dive into gold first to see what is the likely next move going to be. And we're going to do the same for Bitcoin and what is the return on investment for both over the next 24 months approximately. So let's now dive into gold. So we are looking at the same chart with gold. So markets move in fives and threes. You want to really be aware of this. And by the way, if you want to really make some serious money from the markets, whether it's gold, Bitcoin, or other asset classes, you're going to want to take my 4 Secrets Trading Masterclass. It will show you how to anticipate what's likely to occur next so you know when to buy, when to sell, when to stand aside. So you can anticipate the next move. And we're going to do that both with Bitcoin and gold, but it's a free masterclass. The link is in the description below. So when we're looking at gold, what we want to pay attention to is this. If you're new to market analysis, one of the most powerful things is something called Elliott wave theory. And markets tend to move in fives and threes, right? Fives and threes. And when we can spot this pattern within any asset class, we want to use that information. So when we're looking at gold, if I just show you this again, we got this 1, 2, and looks like a 3, 4, 5 in blue. But now what we're going to do is we're going to zoom in to the recent price action. And it's really the green data. I'm just going to clean this up a little bit so we can see it a bit clearer. Is the green part of the market. When I say green, I mean the green lines that we've drawn over here. Right? We want to look at this. Gold looks like it is going into its final leg of something called a fifth wave, a wave 5 of a wave 5. And what I'm talking about is this. So what we're going to look at is the typical, most common price ratios, because markets are driven by fear and greed. I'm telling you, if you just ignore the fundamentals, it's all baked into the price. And 9 times out of 10, it will play out as anticipated. So I'm going to set a price target for gold based on this. And by the way, I show you how to do this for all asset classes in the masterclass. So there's a simple retracement called an external retracement. I'm not going to go into too much detail here. I'm just going to draw it out and we'll see the price target for gold. There's 2 particular ratios and they're really reliable. It's crazy how often these will get hit. So gold is likely to go from around 1,660 to around 2,200 to 2,300. So what we want to look at is if we had $100,000, let's just pull this up, $100,000, well, we can say 10,000, 1,000, let's just say 100,000, and we wanted to buy as much gold as we can. And this is in ounces, right? So the price of gold. So today it's 1,660. We will get 60 ounces of gold. And let's say we managed to ride the trend and it went to this peak, this wave 5 peak, and let's just say it was 2,300. So then we got to sell that gold at its peak. We would make around 38,000. So it's around 38%, right? 38%. So log that number into your mind, 38% with gold. So now we can do a similar thing with Bitcoin. Now, this is powerful. I can't emphasize how powerful this is. Like the markets just abide by, it's like gravity. These rules apply, this market psychology applies, and it's fear and greed playing out. And I cover this in great depth in the 4 Secrets Trading Masterclass. And it will blow your mind how you can really be 2 steps ahead of the market So you can make an immense amount of money knowing in advance when to buy and when to sell. So now that we've done that with gold, we're going to do the same for Bitcoin. Now, Bitcoin is in a different position to gold in its psychological buying and selling mood. Now, we saw it with this. This was a particular chart that I just wanted to emphasize the similarities between the two. How uncanny is that? That it just looks almost identical, even though one is over 40 years and one is over 4 years. So there's a 10 times different in time span. So now let's look at Bitcoin in terms of price action. But look at this. Right, since 2017, it had this amazing move to the upside. It did this big correction called a wave 2. And then just like with gold, it did this 3, 4, 5. But we've got more information since November to now. Bitcoin has gone through a big correction. And that's quite common. And by the way, with gold, that's what we would anticipate as well to happen next with gold. Now, not in terms of a short time frame, we're talking about a much longer time frame. But it's more than likely after a movement like this with gold, that might take a couple of years to form. We do anticipate a bigger correction. And you'll see this time and time again with all markets and all time frames. So with Bitcoin, we've actually had that correction, this massive correction since November last year. But it looks like we are at the tail end of this correction. Right? It doesn't mean it's going to happen like this, but it's highly probable, very highly probable. So now when we look at this market, we go, okay, what typically occurs after a 5-wave movement up and an ABC correction? It's almost a whole buying and selling behavior repeats itself. And there's a particular ratio. It's different from what we use with gold. The most common, I've actually drawn it in already, something called a 1.618 price extension. It's over here. It's likely that Bitcoin will reach 120,000 within the next 24 months. Really highly probable. It won't be in a straight line, but it's highly probable. So now what we're going to do, remembering with gold, we would have got approximately a 38% return. Again, if you had $100,000 and you bought as much Bitcoin as you could, let's just call Bitcoin's price, it's a bit lower than this, but let's just say it was $20,000 per Bitcoin. You'll be able to get 5 Bitcoin. But let's say you managed to ride the trend and it did successfully go to $120,000, which is the typical price range of the next buying and selling psychological mood that tends to occur. And we managed to sell it at 120,000. It means your 100,000, it will be worth 600,000. So that's a 600% return. So we have the answer, my friends. Buying the underlying asset over the next 24 months when we're purely just looking at return on investment, not guaranteed obviously, but highly probable, Bitcoin will give you a 20 times higher return, 600% versus a potential 38% with gold. Now, quick caveat, I'm actually trading both, right? Trading both. Trading is different from buying the underlying asset because you can set stop losses and have a tighter stop loss, and you can make almost equal amounts on both. But if you're buying the underlying asset, Bitcoin is the winner. Did you get it right? Do you agree? Do you disagree? Let me know in the comments below. Let me know what you think. Now, if you want to learn how to make serious money from the markets, I've created this free masterclass on how to trade. One of the secrets we covered today, which is really the pattern recognition, and how to recognize these patterns in advance. And if you can, you will know when to sell, when to buy, and when to ignore the market totally and look for other investment opportunities. It's 100% free. Is in the comments below. It's in the link below, in the description link below. So if you like today's video, like, subscribe, hit the bell notification. I'm going to read you a quote from my book. I'm going with chapter 5 today. It's Leonardo da Vinci. Simplicity is the ultimate sophistication. Simplicity is the ultimate sophistication. It blows my mind. I've been doing this for over 15 years now, reading the markets, with the forex markets, with stocks, with commodities, with cryptocurrencies. Well, cryptocurrencies has only been in the last 5 years, even though it's been around since 2009. But the markets represent fear and greed. They're driven by crowd psychology. No matter what anyone tells you, whether it's telling you the news, the fundamentals, I'm telling you it's buying and selling behavior. When buying is greater than selling, prices go up. When selling pressure is greater than buying pressure, prices go down. and its psychological moves that are playing out. And in the 4 Secrets Masterclass on how to trade and how to really make some serious money, I cover how you can see the psychological mood of the market before it occurs so you can bet on the right side or on the right side and adjust and manage your positions accordingly. So there you have it. Bitcoin versus gold over the next 24 months. Which one is the better investment? Well, in my opinion, based on technicals, it looks like Bitcoin wins. Got nothing against gold, but it's all about return on investment. And if 24 months gets you 600% versus 38%, well, the numbers don't lie.